One more small correction, and all things being equal, my belief is we will restart the bull count or bullish cycle will run again. If you recall back in 2011 when gold ran virtually from, depending on where you go back to, 700 or 1,000 to 1,900, it went through either 2 or 3, I believe it was 2 full bull counts. In other words, 1 through 5 ABC, 1 through 5 ABC. So it ran through it twice. There's no reason to assume that gold will not return to a full bullish count after this correction is over. The key is technicals are only as good as the fundamental fabric that's in play at the moment. And if we look at the long-term move in gold, the real bottom occurred at about $1,960 back in October of last year, and it moved from 1,900 to 28. A $900 move. That's a superior move. I mean, that's the same kind of move we saw in 2011. However, in 2011, we actually had a long procrastinated price decline. In fact, for the first year after it hit 1900, it oscillated between 1900 and 1800. And then when it broke, I believe it was 1564 in the charts, it virtually crashed over a multi-year period down to just above 1,000, 1,020. I think in the case of current pricing, we have more than just a economic recession or a banking crisis or Federal Reserve intervention, because the geopolitics and the conflicts were not as intense. So we are working with more variables that have propelled gold higher that I believe will continue to move gold higher from this point after the correction has concluded. I believe that the highs that came in at the end of October at $2,800 were in fact the peak. It's the highest value on record. I believe that that will not be taken out this year. We only have 2 more months left, but more likely next year. I think that in terms of my forecasts, I had to update them a couple of times because at first I was looking at about 2,700, and as more fundamental variables came in, we had to modify our model to really fit the fundamental fabric that we were looking at. So I was looking for different waves to be extended, and I was looking at the higher end of the spectrum. My personal sentiment is $2,800 is the target that we hit for the high of this year, will remain that, but I don't think we will enter a multi-year correction as we did at the end of 2011. I think we'll have a much shorter correction in terms of steepness. I think it will be more shallow. So far, we have corrected about 46% of the price move from 2350, let's call it, the beginning of this last impulse phase, waves 1 through 5. We've concluded that we are well into the corrective phase, and I believe that in terms of price decline, while we could see it go below 2,600, I think that at least for now, we'll see at minimum a counter wave up, and from the counter wave up, one last move down, and that will occur in Q1, and then return to a bullish count. And it will be during that bullish count that we take out $2,800 next year. In other words, to simplify it, I think there will be a key difference between what we saw in the middle of 2011, what we're witnessing now, in that once gold hit 1,900, that was pretty much etched as the highest point that gold would reach until this period in time, many years later, in which it began to move back in October when gold was sitting much lower. That would be here at 1957. So when we consider that in the short span of about a year, October to October, we've seen gold move from 1900, the old all-time record high, to 2800, the new all-time record high. And most importantly, I think that we are in a correction. That's obvious, and we've gone down 200, but I don't think the end of the long-term bullish market sentiment. Certainly, the fact that Trump won is a decisive factor in what we're seeing in U.S. equities. Those have moved higher. Cryptocurrencies out of control to the upside because he is an advocate, and gold, oddly enough, moving lower. My best explanation for why we've seen gold drop $200 from the all-time record high at $2,802 down to current pricing at around $2,600 is the last leg of the upside move rally in gold that took gold from about 2640, 27 up to the all-time record high, was largely based on the uncertainty of the outcome of a presidential election, and most importantly, whether or not we would get a decisive victor, meaning an uncontested result. Had the other candidate won and Trump chose to say that that was unfair or something, that would have really fueled gold to higher pricing. But the fact that Trump won, there was certainty in that. There was a peaceful transfer of power. The uncertainty factor that was baked into the price of gold diminished, came out, and that's why we've seen gold correct by $200. I have to pose, without having a direct answer, is that what we need to see is the action of the Federal Reserve. Now, they have cut rates, a jumbo rate cut a little while ago, a 0.25% rate cut in November. It is anticipated that the Fed will cut by another 0.25% at the December FOMC meeting. And most importantly, what they are focused on in terms of their dual mandate is to right now normalize interest rates. In other words, take them between 3% and 3.5%. So there's a ways to go. If they continue to cut rates, that's going to be bullish for gold. If rates are maintained at the current level, if they pause, that would change the dynamics to what I believe is going to happen, which is that the Federal Reserve will continue to cut interest rates as they normalize them to between 3% and 3.5%.
Gary Wagner, a market expert, analyzed recent gold price trends, forecasting that gold's current correction phase is likely to be less severe compared to the post-2011 decline. Gold's price surged from $1,960 to a record high of $2,800 within a year, resembling the 2011 bull market run. The current global environment, with heightened geopolitical tensions and economic uncertainties, differs from 2011, which saw fewer such pressures. Wagner argues that gold's latest peak may not be surpassed in 2024, but expects a renewed bullish cycle by 2025. This projection aligns with historical patterns of gold performing well during interest rate cuts. While a recent $200 drop in gold's price followed the certainty of a U.S. presidential election result, further Federal Reserve rate cuts could bolster gold prices. Analysts, including Goldman Sachs, predict that gold may reach $2,700 per troy ounce by early 2025, supported by continued economic challenges and potential rate cuts.